Throughout history, man has always tried to chase riches while doing as little work as possible. Then in 2011, SCHD came out and people have been outperforming the stock market ever since. That's right, since its inception, SCHD shareholders can say they have beat the overall market by about 60 basis points. Seeing how about 99% of people cannot outpace the market over a 10-year period, I'd say that's pretty good. But that was all in the past. Surely they can't keep up that hot streak, can they? Today we will take a closer look at SCHD's holdings and the chances of its success in the future. Can we start by giving SCHD a cool acronym nickname? And since Snapchat Home Depot is too long, I was thinking SCHD could do the job. SCHD does a fantastic job tracking the Dow Jones US Dividend 100 Index. This means an investor is buying into some of the best high-yielding dividend stocks in the United States that have proven track records of not only paying out dividends, but increasing those dividends every single year. Just imagine all the dividend paychecks you got this year. Imagine getting all that money yet again next year, but also getting a double-digit % raise every single year for doing absolutely nothing. Look at this, guys. Since 2012, they have given close to a 10% pay raise every year. From paying 81 cents a share in 2012 to all the way in the ballpark of $2.50 this year, that's a 308% increase in 10 years. We have very reliable companies like Pepsi, Home Depot. Man, Home Depot is getting a lot of free exposure in this video. We also have Pfizer, companies that have been around forever like IBM. Their second biggest holding is Merck, a $250 billion pharmaceutical company that offers nearly a 3% yield. Merck is one of the 30 prestigious companies selected on the Dow Jones Industrial Average, a stock market index of 30 mega cap companies used to gauge how well the overall US stock market is doing. And SCHD is loading the boat with companies. This includes companies like Cisco, Coca-Cola, Verizon, among many others in its 103 different holdings. Now let's say you got a little scared. Let's say you found out that Sam Bankman-Fried and his polyamorous friends were actually the CEOs of one of SCHD's holdings, and big finance YouTubers were also in on promoting his scams. Well, actually this will have minimal effect on SCHD's share price because the fund holds so many other great companies that one stock performing poorly really won't make a difference. SCHD gives great diversified exposure to all the major stock sectors except real estate. Since REITs distributions are often taxed unfavorably, and this ETF doesn't do any covered calls options trading, I'd expect SCHD dividends to be taxed as qualified dividends, meaning this can be a great option for both younger and older investors in a retirement account or non-retirement account. It's pretty amazing that Charles Schwab offers such low-cost diversified funds with great tax efficiency for just a 6 basis points expense ratio. That's only $6 for every $10,000 invested, and they do all the work for us. SCHD pays quarterly dividends, not monthly. They come in every single March, June, September, and December. It currently has about $40 billion in assets under management, which has gone up considerably since last November when they were at just $30 billion. It seems like the market is really catching on to how great of an investment SCHD can be. Now, perhaps the most important question, can SCHD continue its dominance for the next decade? And long story short, yes, SCHD should continue to do very well for years to come. SCHD holds companies that provide everyday essential goods and services. It's got a lot of large cap companies that have a history of making profits every single year and sharing those profits in the form of distributions to its shareholders. It's not an ETF full of speculative companies that will have volatile earnings. And in case a company did have poor performance and cut their dividend, the index is constantly getting rebalanced routinely to always have winning companies. Just look at how poorly the market performed in 2008 and then again during the 2020 C19 crash. Those are certainly hard times to keep putting money into the market and watch it burn in the short term. But in the long term, those were the investors that made some really nice profits. In a bull market, everyone might look like a genius, but the bear market is what really separates the good investors from speculators. Did I mention SCHD also has a really impressive starting yield of around 3.25%? This is an ETF that's proven it can not only outpace the market, but they're also paying some really strong dividends and increasing those dividend payments as time progresses. SCHD is not a get-rich-overnight scheme, but it is a get-rich-slowly ETF investment, which after recent news events, might actually be my cup of tea. I'm currently holding about 17.28 shares in my taxable account for about $1,300 in equity, and another 7 shares in my IRA for another $530 in equity. Altogether, that's about 24 shares and $77 in passive income I'm making every single year from SCHD. Now keep in mind, this fund is one of the newer positions in my portfolio, so I'm still constantly adding more money to it. In fact, I recently just added another $400 in the past couple weeks. SCHD certainly has a place in my dividend portfolio right next to my other individual stock selections as well as my other growth companies in my 6-figure stock portfolio. I'd love to hear if SCHD is in your portfolio. I know it's a fan favorite here on YouTube, but why do you like it so much? Now remember, these videos take a lot of time for me to research and edit. Please just help out a small-time YouTuber by hitting that like button. It does so much for this channel. It's a great way to say thanks. As always, my videos are found in podcast form under the Collect Cash podcast name. Podcast viewership is going up so much, and I'm really appreciative of everyone that listens.